Immigration dara nga am nga ñàkk demal ci wi yaay bindu jee nga am nga ñàkk demal ci wi yaay ñu taxawu la West Africa jama aluma kumi aluma wig kumi wig natale adima ya aluma koy alte fenjola kaiti bibulu Wigtela immigration information ganjandila Oto wiglodula doko mayata Wigulitale kadimbalu makoi Wigulitale kadimbalu makoi Wigulitale kadimbalu makoi Wigulitale kadimbalu makoi Musukono mal aliwuli ya mutalse shishele lalo aliwuli ya mutalse ani masangilu lusi aya mutaife Yesu khanja boge amura joglen bindu je ya ci sa kayti immigration dara dem len bindu je bo ci bagge amulen jogolo gwawa dem len bindu je fembe bulu fente bulu da apply dimaya bulu nakendo da apply we contact through our Washington West African Center. Families go healthy.
Rightly said, is our review of the year as the economic brief thereof. And we hasten to say this is a collaborative effort led by the Economic Policy and Research under the leadership of Dr. Jame, who put the report together with Babukar as the director. And as you know, the Ministry of Finance is a whole ministry. We're here with the agency, our right hand, that is the GRA, the Gambia Revenue Authority, who is one of the pillars of the ministry. So the presentation will walk you through, as has been said, the evolution of the economy in 2023 along the 8 elements that the P has introduced. It will take the format of a presentation which has been shared. Ideally, we should have walked you through the screen, but in terms of the logistics, we have shared the printout of the presentation. So we will start with the slides. I think I don't know whether the slides are numbered, but if not, we will. Yes, okay. The slides will be moving. The first slide is focusing on the GDP and the GDP growth. And the figure we are looking at is the trend in the economic growth between 2016. We focused the presentation on the evolution of the economy from 2016 to 2024 fiscal year. And as you can see, the GDP growth rate, which is the trend line, was at a low of 1.6% in 2016 and moved to 4.8% in 2017 and struck a high of 7.2% in 2028. But on the backdrop of COVID 2020, the GDP collapsed to 0.6 in 2020 and rebounded back to 5.3 in 2021. It is along that trajectory. For 2023, it is at a projected amount of 5.6. We expect the 2024 GDP to be at a rate of 6.2%. The second slide is showing us the comparison within the region. The trend line, the red line is the sub-Saharan African average. That is the comparator in the region. The green is Gambia. The orange is Ghana. The gray is Sierra Leone, and the yellow is Nigeria. As you can see, our GDP was slightly above the sub-Saharan African average in 2016, but trailing most of the regional benchmarks except for Nigeria in 2016. But since 2017, it has outperformed the sub-Saharan African average, which was around 2.2%, when the GDP growth rate in Gambia was 4.8%. It continued to the outperformance in 2018. In 2019, thereafter, we had outperformed the sub-Saharan African average growth and compare favorably within the regional comparators. For 2021, we outperformed both the sub-Saharan African average as well as the region. And this outperformance continued in 2022, 2023, when we have registered 5.6% growth, when the sub-Saharan African average was around 3.75, and the regional benchmarks were less than 4%. For 2024, we expect the economy to grow at 6.2%, again outperforming the regional comparison. For purpose of clarity, the sources of this data are from the IMF Economic Outlook. For every statistics that is displayed, where to the extent possible are from external sources, the sources are referenced at the bottom of the slide. This part of the presentation will walk us through inflation. Our inflation was on the double digits from 2016 to 2021. But with the backdrop of the COVID-19, Russia-Ukraine war, fuel prices, fertilizer prices, as they call it in this day, they call it polycrisis times. Economies have seen an upshoot in the inflation. We closed 2023 on a high inflation rate of 17%. But when we put that in context, which is the second panel of this slide, it shows that our 17% compares favorably with Nigeria, Ghana, and Sierra Leone, but is elevated compared to the safer zone. The difference is worth noting because the safer countries, their currency is pegged to the euro, and their inflation follows the euro inflation. It's always modest. We had registered a lower inflation against Nigeria, Ghana, and Sierra Leone, but slightly elevated more than Liberia. Inflation at the end of December 2023 in Gambia was about 17, when Nigeria was 25, Ghana was 42, and Sierra Leone was 42.9. This data on the inflation is from GBOS, and the regional comparisons are from IMF website. This slide will take us through the gross external reserves. This is the stock of our reserves that are deposited with our foreign institutions. And we see a nice increase, the number of import cover, which has been basically 3 months is the standard import cover as a cutoff in general. From 2016 to 2018, we were hovering around the 3 months into import cover. And this took a sharp rise in 2020 and 2021 when COVID impact, the flows came through, and our external reserve rose to an import cover of 8.9 months. In 2022, this started going down, as we have deepened into our reserve to stabilize commodity prices and help finance make dollar available to the private sector. Currently, as of 2023, our import cover stands at 5.6 months, which is a comfortable margin above the 3 months benchmark. This slide takes us through the net domestic assets and the foreign assets. As we can see, these have all increased over the period. And in the interest of time, we will not spend much time here. Banking liquidity has also increased. The deposits have grown and all outperforming above the reserve requirements. In fact, we do have excess reserve, which is taking a noteworthy upright increase in 2023. We'll take more time on the next phase of the presentation, which is the public debt and the debt sustainability assessment, because this has generated a lot of interest of late, and we believe we thank the public for the interest so this indicated. Our public debt stock as at 2016 stood at 46.3 billion, and this increased to $110 billion in 2023. And the graph on the right gives you the debt stock at each period, 2016 at 46 and 2023 at 110.6. The blue part of the pie of the chart is the domestic stock, while the yellow part is the foreign stock. And the evolution of the debt stock was very ably explained by the economic operations. In 2016, when the debt stock was 46.3, there were legacy debts in the system which were not recorded. These were the overdrawn TMA at the central bank, government operation with social security, and other obligations which were in the system but they were not recorded. So as a result, the regime inherited large stock of domestic and external from the previous administration, and this imposed a very expensive debt service obligation. And the evolution is that there were contingent liabilities, which are mainly stemming from the SOEs like NAWEC and loss-making enterprises. And in 2019, on the onslaught of COVID, we went through a debt restructuring where repayment of loan obligations were suspended due to the impact of COVID. And the depreciation of the dollar has also aggravated the loan book because the foreign currency component of the loan stock was translated at more elevated exchange rate. New borrowings did take place, and this went on to finance the ongoing development projects. Between 2018 and 2020, the domestic debt stock did not change much. The change in the public debt stock resulted from external debt restructuring and the depreciation of the dollar against major currencies. Because when the debt restructuring happened or the moratorium on the repayment, that's what they call debt service suspension, we were not servicing our debt. What we were supposed to have used to finance our debt was used to invest in the health interventions brought in by the onslaught of the COVID. As a result, this has elevated fiscal pressures, but notwithstanding, the fact that we were not servicing our debt, it means that the stock remains constant because we were not paying debt. And this was due to not just the Gambia, it was global. The debt stock, as a result, increased due to the disbursements of the COVID intervention. The graph is showing the evolution of the change in the external debt and the exchange rate movement. Because for the interest of the listeners, the foreign currency component of the debt stock must be translated into dollars. So every depreciation of the dollars translates to a higher value of the foreign currency equivalent of that external debt stock. So you can see in 2017, the exchange rate to the dollar was 47.5. And as of 2023, at the end, we closed the books at 63.4. So you are talking about an exchange rate depreciation of more than 20%. And to do justice to the discussion, what we did is we look at how the public debt evolved. In 2017, we started with the loan book at 46.239 billion. As I explained, the legacy debt portfolio that were within the system, the overdrawn TMA, the obligation to some of the state-owned enterprises, were consolidated into a 30-year bond. This gave rise to, this amounted to 10.77 billion. When we say 30-year bond, this is not new borrowing of this government, but rather debts in the system which were not recognized. And we also had the NAWEC bond. The obligation of the NAWEC were converted into a NAWEC bond. We also had confirmed debt of 2.3 billion. And of course, that's an important element. When you have a debt stock, which is in foreign currency, and your currency depreciated 47 to 60 something, and you translate it using the dollar, the exchange rate depreciation account for 7.55 billion. So this cumulative impact of all of this is a net, the debt stock has increased by the sum of 10.7 plus 1.6 plus 2.3 plus 7 point, which is about almost 40 billion, 20 billion. So 20 billion added to the original stock, which was 46, translates about 68 billion. That's why the new borrowing of this dispensation is 41.9 billion. So it's very important that we put it in context to show that when we say 10.6 billion, it doesn't mean that this government has, this dispensation has borrowed twice more than what was there. As you know, the structure of our loan book, particularly for foreign debt, some of them have repayment period of 20 years. So if you started debt when your exchange rate was around 47 and you translate it when it is 63, the exchange rate impact of that component is elevated, which came to 7.5. And the new borrowing of 41.9 billion went to fund the following interventions. These new borrowings, and I think we should look at the debt in discussion, because when you say debt is a risk, yes, we are aware, because it put more obligations on you to service that debt. But the most important thing is responsible borrowing, to make sure that the loans you are contracting go on to generate assets. The biggest challenge we have is we don't have a national balance sheet as a country to know which assets have been generated by the loan portfolio. The Batin Hardin Highway is part of the loan book contracted, and as we know, the value of that contract is about $96 million. And the phase one of the University of the Gambia, the recently concluded University of the Gambia construction, was funded through this loan book. It should be noted that while the university project started earlier, but the disbursement for the commencement of operation only took place under this dispensation. The rehabilitation of the Banjul International Airport, the construction of the VVIP launch at the airport, the Gamtel broadband network project, which I think is about $25 million, the port expansion project, the OMVG interconnection. We are now able to tap energy from as far as Guinea, likely, from Senelec, and also the regional power pool due to the OMVG interconnection. The renewable energy project is another element. And I think it's worth spending time on the renewable energy project. This is consistent with the president's agenda of universal energy access by 2025. Currently, Gambia's energy coverage is about 63%. When you compare that with the sub-Saharan African average of 36%, I think the renewable energy project, the Banjul rehabilitation, the OIC roads in the greater Banjul area, such as we are seeing right now, are all part of the loans contracted under this period. The rural roads, such as Lamenkoto Pasama's completion, Nyomi Hakalang, Sabasanjal, Kiang West, and the construction of the Basian Brikam, and the various projects which are financed through loans, such as the rice value chain. Then once you have the debt stock, it will require some assessment in terms of the sustainability. How sustainable is the debt in terms of the vulnerability to our debt stock is assessed as high risk but sustainable, and this is confirmed by IMF assessment from their debt sustainability analysis. In 2016, our debt to GDP, which is the gauge that is used to measure debt was 72%. And this went as high as 86% in 2018. But since then, we have seen a downward decline, and the ratio declined from 82% in 2022 to 72% in 2023. So we are able to say that the debt to GDP ratio declined by 10 percentage points. The next aspect will take us through the public finances. And for the public finance, it's good that the GRA is here because they are the champions. Before we go on to the slides, we'll once again extend our appreciation to GRA for having once again performed a record performance level. For the month of the March ending 2024, GRA closed the month at 2 billion, which is a record. That has never happened in the country. And DG, thank you, but your work is cut out. So we'll support you along the journey. And all of this is done without any increase in the tax rate. Rather, what the GRA is doing is utilizing technology, digitalization, and enhancing the compliance rate. We've made tremendous increase in the domestic resource mobilization. And this has increased. The total domestic resources mobilized in 2016 was 7.6 billion. And the components are the tax revenue and the non-tax revenue. And this increased from 7.6 billion to 22.8 billion in 2024. But for 2023, which is the year we have just closed, it moved by more than 10 billion to 17.8 billion. So we are talking about a growth rate of more than 134% in the period from 2017 to date. These improvements reflect a robust effort of the GRA, which is geared towards enhancing the compliance and widening the tax base. So DG, thank you for a good job. Aluta continua, the struggle continues, as they say. Then the partner support also helped us in our budget implementation. In 2017, we have received 3 billion as donor partner support, and this declined to 0.78 in 2018 and increased to a record level of 5.28 in 2020, which was due to the COVID support of the partners, but dropped significantly to 0.5 billion in 2021. But since then, it has taken an uptrend. In 2022, we received $2.3 billion as budget support, while in 2023, we received a record budget support of 4 billion. And 2024, we are expecting 3 billion. This is to show that the partners are really with us in our development agenda. And when they see reforms, they definitely support. And the budget support is linked to reforms. And those reforms are what has made it possible for us to see significant improvement in the public financial management, in the domestic resource mobilization, and enhancement of the governance architecture. Public spending has increased from 12 billion in 2016 to 37.2 billion in 2023, and it's 189% increase, resulting in an annual increase of 27%. Capital budget, due to the ongoing and ambitious road infrastructure project, increased from 2.6 billion in 2016 to 17.8 billion in 2023, a record growth of 589, fivefold almost. And this, we are all seeing, every part of the country is witnessing record infrastructure development, from Kiang West to Sabasanjal to the Banjul roads, urban roads, all of this. In fact, if you look at the road network, we have more roads constructed in the last 7 years than the previous regimes combined. The increase in the expenditure is driven, the capital expenditure increased from 2.6 billion to 17.8 billion. The recurrent expenditure, the annual growth rate of the expenditure is indicated. And as you can see, we have a record increase in the capital expenditure of 84% annually due to the ambitious increase. Recurrent expenditure also increased by 46%, and on the backdrop of higher debt service and the increment of the 30% salary increase of the civil servants with the rising cost of living. What does this all translate to? When you spend and you don't have, it translates what they call fiscal deficit. And we have seen that our fiscal deficit, the higher the number, the worse the performance. In 2016, the fiscal deficit was 6.6%. This has reduced to 5.8% in 2021. And we are not complacent. We have been able to reduce this to 2% in 2024. And for 2023, it was 2.7%. This was what was projected. But we are on course to ensure that the budget deficit is contained so that the deficit cannot be financed through borrowing with the elevated level of debt. Then, how did we close the year in terms of the 2023 budget execution? We are reporting here on the consolidated revenue and expenditure of the year, which is the budget that was approved by the National Assembly and the expenditure appropriated by the National Assembly. For the year, we expected to generate total revenue of 19.6 billion, but we outperformed this by 11%, closing the year with 21.89 billion. And these were from sources such as taxes, where the revenue from tax was, we expected almost 19.23, and we realized 19.15, which is almost 100% in line. The most significant movement we've noticed is the non-tax revenue, which was budgeted at 2.9 and increased to 3.9 billion on the backdrop of the realization of the sale of Mega Bank. The budget support also recorded a 147% increase. The budget was at 2.7 billion when the inflows that came from partner support was 4 billion. This is because some of the partners increased their budget support to more than what we budgeted. The World Bank, our budget was 20 billion. They gave more than 40 billion. Agent France said the development was not budgeted. They gave 2 billion. In the EU also gave budget support in line with what we expected. When it comes to the expenditure, we expend based on our expenditure was in line with what was budgeted. The budgeted expenditure was 20.3 billion and the actual was 20.4, which is an overstretch of 111 million, but an overspending of only 0.6 billion. And the distribution of the expenditure was higher due to the debt service component. We spent we expected 2.9 billion on the debt service, while we actually realized 3 billion. And this explained more than the over expenditure. Personnel emoluments was budgeted at 17 billion. We actually spent 17.4 billion. So in a nutshell, the budget was pitched on an overall deficit of 666 million. We closed with a budget surplus of 1.5 billion. In terms of that, I mean the consolidated revenue versus the consolidated expenditure for the period, which is the 21 billion against the 20.47 billion. This is how we executed the budget, which was appropriated last year by the National Assembly. Then we also went on to the public financial management reforms. In a bid to free up the fiscal space and enhance growth, series of public financial management reforms have been implemented to enhance fiscal discipline, transparency, and fiscal risk management anchored on domestic resource mobilization, among others. The number of reforms ongoing are as follows. First reform is the review and amendment of the Public Finance Act. The Public Finance Act has been reviewed and has been amended. Currently, it is at an advanced stage. Cabinet has reviewed the bill and is on its way to making it to the National Assembly for ratification. And the whole objective of revamping the Public Finance Act is to promote accountability, transparency, and sound public financial management. We also had procurement reforms. The ministry coordinated a legislation 2022 of the GPPA Act to address weaknesses in the public procurement and strengthen regulatory and oversight functions of the GPPA. In 2023, the public procurement regulation has also been approved by Cabinet, and we are hoping that instruction guidelines will be issued for the introduction of e-procurement, which will be funded by the World Bank. The third reform we have embarked on was the SOE reforms, that is state-owned enterprises. The state-owned enterprises total assets, as I have mentioned, is about $30 billion. However, they continue to be a drag on the public purse, and the reform in this area is a bit to make them more agile and be financially autonomous on their own. A state-owned enterprise commission has now been set up since September and is on its way to help restructure some of the state-owned enterprises and make the existing one more efficient. Performance contracts have been signed with the state-owned enterprises and the commission. The accounting and recording reporting reform, we have rolled out the integrated management information system, IFMIS, to all the local government authorities, unsubvented entities, and foreign missions to ensure that there is timely preparation, recording of government financial transactions, as well as timely submission of the financial statement for audit purpose. The establishment of the Treasury single account is also one of the reform agendas embarked on. On the sixth item, we have the development of the public asset management policy. As we have just mentioned, there is no public asset register, which is functional, and we have now approved the public asset management policy to put in a place all the public assets of the state so that all the roads, all the bridges, all the factories that are state-owned and the buildings will be in one place, and every Gambian will know what is the stock of assets the country has. So this is another reform we are embarking on. Of course, we also work on resource mobilization in the form of asset recycling of the Senegambia Bridge, which is at an advanced stage, and PS, I'm sure, will be pretty much ready to sign the agreement. The anti-corruption bill also came into law in December 2023, and the bill has been assented to by His Excellency to ensure that the fight against corruption is embedded. This section of the presentation will take us through our engagement with our partners. As you know, our development journey is not solo. We are working with our partners, and one of our strong partners is the IMF. We completed the Enhanced Credit Facility, ECF, successfully last year and negotiated a SSO program immediately, and the negotiation was completed. The negotiation actually, the first program was a 50 million program, and the successor program, the IMF has increased the size of the program to 100 million. The program is focused on advancing reforms in resource mobilization, public financial management, economic governance to support inclusive growth. Recently, the 100 million 3-year ECF has been approved by the IMF board, and we are due for the first assessment, or the first review for the quarter ended March. The USA is another important partner in our development journey. They have ongoing projects. The first one is the MCC, Millennium Challenge Corporation. What is the Millennium Challenge account, which is an envelope of 25 million to support the reforms in the energy sector. We are blessed to also be given another program by MCC, which is the Compact. The Compact is these are all grant funds, and the US government has selected Gambia in December 2022 to be eligible for a Compact that comes with, we are thinking about an envelope of about around the range of 300 million, which will be grant funds, and they'll focus on two areas. The two areas the MCC Compact will focus on is the full utilization of the River Gambia and the quality of education to be relevant to the citizens and the needs of the country. The United States Department of Agriculture has also embarked on a school feeding program with an annual $28.5 million grant to support the school feeding program for the lower and basic education throughout the country. We have also been eligible for the AGOA facility, which is a trade facility program run by the US to give tariff-free export to the US market of the products that are certified here. And the US government has also qualified the Gambia to be part of the Budding Malaria Initiative, and this initiative will give $4 million per year to fight against malaria and until malaria is eliminated. USAID will commence operation in the Gambia back, and we are pleased also that the United States Embassy will start operation, building their own embassy premises in the country. All of these partner and public financial management are also tracked. This is what we call the institutional and policy assessments. The assessments are conducted by third-party independent organizations, and the first one was the Millennium Challenge Corporation. Every year, the Millennium Challenge Corporation evaluates all the eligible countries, all countries, using 20 indicators along 3 priority areas, which are ruling justly, investing in people, and encouraging economic freedom. Each year, each MCC candidate is evaluated against the scores, and the scores are values that are independently derived by independent agencies. And we are pleased to inform the gathering that from 2016, the Gambia has benefited to be eligible, qualified in 6 years in a row of all our assessment. In 2017, we passed only 11 out of the 20 scores. This increased to 12 out of the 20 scores in 2018. In 2024, we have actually improved more by passing 14 out of the scores, out of the 20 scores. And as you can see, the next slide will walk us through the elements of the scores. On the economic freedom, they look at the fiscal policy, inflation, regulatory quality, trade policy, land rights and access to credit and business. So on that, we are lagging behind gender in the economy, which we all know due to the patriarchal nature of our society, we are falling behind in that area. Investing in people, that is where we have the rates, and the rates are mainly primary education expenditure, and this natural resource protection and immunization rates. Those are where, and for ruling justly, we have scored green in all. So as you can see, a red means not a passing score, a green means a passing score. So we've not done badly in there. On the World Bank also conduct a country policy and institutional assessment. This is a flagship report assessment, a diagnostic tool used by the World Bank to assess the policies and institutional framework of the country. Each country's performance is scored into 4 group clusters. And the 4 group clusters are the coherence of its economic management policies, coherence of its structural policies, the degree to which its policies and institutions promote equity and social inclusion, and the quality of the public sector management and institutions. We're pleased that we have been having a consistent score of 3 from 2017. But in 2022, our score has increased to 3.1. And the 3.1 increase is indicated in this graph, which will be as in the cluster scores of we have done well in the economic management, we've improved on the public and social inclusion and equity, and the other elements. Reforms that are required to sustain and enhance our CPI scores. On the economic management front, we need to cut down on duty waivers, tax exemptions, and other tax advantages, fast track the digitalization, and conducive legal framework for digital financial services, financial and digital infrastructure awareness, like GAM switch should be upgraded to become an immediate payment system, and to take into account the use of SIM cards as identity proxies in financial transactions for labor laws and social protection. On the policies for social inclusion, we need to work on the completion of the social protection bill, increase social security accessibility, improve cooperation to systemic shocks, that is resilience, and ensure that the comprehensive group measures include rural development, social protection. Institutional management, we are supposed to boost the quality and completeness of the consolidated government accounts, tighten the procurement requirement, and strengthen the legal foundation for safe and property rights and contractual rights. On the governance, we assess how we've done in our corruption assessment. And for that, we went to Transparency International Index of the Perception to Corruption. As we know, the Transparency International every year rank 180 countries on their perception of corruption. And the country's ranking has increased from 110 in 2022 to 98 in 2023. By that, when we say 110, that means out of the 180, you are ranked 110. So the more you go up the scale, the better. So between 2022 and 2023, we have improved 11 steps. So that means our corruption perception has increased by jumping 12 countries that were ahead of them. We have surpassed them. And in December 2023, the National Assembly also passed the anti-corruption bill for the creation of Anti-Corruption Commission. It has been a long presentation. What we thought we should share is a public financial management exercise, and it's a public exercise. No one can do it alone, and the cooperation of every Gambian is welcome. So we can conclude by saying that the past few years has been challenging due to the outbreak of COVID-19 and the spillover effect of the war in Ukraine and the growing impact of climate change and adverse weather events. Despite these challenges, significant improvements have been registered in the public financial management reforms, domestic resource mobilization, funding infrastructure investment from domestic resources to support inclusive growth and maintain overall macroeconomic stability. Significant milestones have also been recorded, such as the successful completion of the 3-year ECF program with the IMF for the first time. We had completed the IMF program before, but those were like standby arrangements, which were 1 year. And this was under the leadership of late Sheriff Sekuba Sise, his blessed memory. And we give full credit to his contribution. And we have begun a new program, but this one is a 3-year program. That's with the distinction. We also had a passing score of the MCC for 6 consecutive years, and our overall score for the CPIA assessment increased for the first time since 2017. We will say that reforms should be sustained to maintain the growth trajectory of resource mobilization and fiscal consolidation as the main input to improving and enhancing the living standards to achieve sustainable socio-economic development in the country. We thank you for your kind attention, and the floor is open. CG, thank you.
Yeah, thank you very much. Maybe you want to add something?
Yes.
Okay, yeah. So let's do it Q&A because of time constraints.
Yes, okay.
So,
Well, Sabali, thank you. You're welcome. Yes, yes, yes. Thank you. Thank you. Put on the slides. Put the slide.
Yes, so we are reported 2.6 billion. So that's the tax and loan.
Yes, yes.
So I suppose the tax and the loan tax level for 2023 is 15 point something billion, right?
yeah. Okay, I think
Occasion we can give. GRA does collect some revenues which are also non-tax.
Yes.
Because when we talk about tax, that is legal. So the sale of Mega Bank is included in that. So that's why our budget has a surplus of 921 million. We budgeted 2.9 billion for non-tax revenue. I realized 3.89 billion. So sale of Mega Bank is included in the non-tax revenue. Yes. I hope that clarifies.
Yes.
All right.
and also the dividend payment from
Central Bank
last
also.
year was very significant.
Yes,
Close
exactly.
to $1 billion.
Exactly. Yes.
What payment?
Dividend. Central Bank paid dividend. Yes.
It
Yes.
was very significant.
Yes,
Close to $1 billion.
Yes.
So the other issue is one of the things that happened back in 2016, 2017 to 2018, after the new government came, it was to introduce a number of measures because Bravo had a campaign promise to reduce prices of basic commodities. And there were a series of duty waivers that were introduced, at least they were, that were not disachieved. Now, fast forward also, then we had CBG had also given 150 million apparently dollars to some importers to import food products. And then,
to ameliorate immediate pressures. And as such, they have to be of a recurrent nature. The investment in agriculture and food production is the long-term solution. And that requires long-term capital. You do not fund short-term, long-term requirement from recurrent budget. And for this, a number of projects are the Ministry of Agriculture to intervene in the agricultural sector. I think the amount of projects on the operations or implementation and Ministry of Agriculture span more than 300 million.
Just
Yes.
this year,
Yes.
the
Yes.
banks are going to approve more than 100
Million
only for
agriculture.
Yes.
And these are long-term investment. That's how we are acting on that. In terms of the utilization of foreign reserves, this came about because of the dollar shortage. And as you know, this was having an exogenous factor. When the Fed raised interest rates, the dollar become pricey. So portfolio investment moved towards the US. So the dollar become under more demand. As such, most developing economies have dollar shortages. This was not unique to Gambia. As a result, the rise in the dollar translates to a rise in food prices. Because as you know, we import more than 90% of what we consume, and we pay for this in US dollars. So because of there was a shortage of dollars, central bank dipping into their reserve. That's why if you look at our reserve, the import cover declined from 8 months to almost 5.6 million, 6 months. To support the private sector in the importation of oil, that is, by oil I mean is petroleum products as well as essential commodities. This was done to make sure that there is no fuel shortage, to make sure that the smooth operation of the economy works. So we are approaching it on a two-pronged approach. Long-term investment through partner intervention, as well as our own budget. Because for supporting the agricultural sector, government invests twofold. We subsidize the input of fertilizer to the tune of more than $500 million. We also subsidize the crop financing. The crop financing subsidy is more than 500 million. So in combined, at any given year, government is allocating 1 billion to support the agricultural sector. So I hope that that is clear. Thank you.
And the import-dependent country, we consume a lot. Most of the things we consume. So, and the prices of essential commodities are dictated by the supply chain constraints and also the exchange rate depreciation that you have just demonstrated. So these two combinations have resulted to inflation shooting up from 2022 to now, but it has started easing now.
Yes, I think as of the last time it was around 16.5, 16.7. Yeah, it came down, but the December one was 17. That's what we reported. Yes, yes, madam.
You did mention it differently, but what can we point to say is that one major achievement of the ministry that we can point at, and why?
Oh, beat our chest. An economy is an evolving thing. If the winds are on your sails, it will be very bright. Sometimes we are going through shocks. We're going through challenges. But I think the most important achievement is the macroeconomic stability, which I did not mention, but I deem the overall presentation was that, to show that the economy is stable, our inflation numbers are comparable to the region, our growth numbers are performing the region, our exchange rate stability, while depreciated in nominal terms in Gambian context, but if you look at the exchange rate depreciation in the region, and even if you look at the price of commodities, we are aware that cost of living has increased. That is due to the income condition of income level of the citizen. But if you compare the price of goods in the Gambia, just across the, and you know, we want to be assisted and we want the citizens to engage. It's not good enough to say the Minister of Finance say, oh, the prices are cheaper in Gambia. Just Google it. Put in the Google sheet a bag of rice in Nigeria, a bag of rice in Ghana. It will show you. Some basic research will quantify to you what we are saying. So our achievements have been numerous, but it doesn't tell well that you beat your own chest. But we can safely say to have completed the IMF program is an achievement. To conclude the budget with a surplus, you budgeted X, you spend less, and you have a surplus. That's another achievement. We cannot go into record as to when that was last achieved. The revenue performance, to have increased the domestic resources by more than 100% over a span of 5 years, which translates to an annual growth rate of more than 19%. That's an achievement. The CPI score. And the CPI score is very important because it indicates how much resources the World Bank can grant you. Our scores have been stagnant at 3 for the last from 2017 to date. But in 2021, the reforms we've introduced have given the score an upkick, and that was when the chart showed. That's why we shared the presentation. So maybe I did not call it to, and I'm not here to beat our chest. You have to be humble when you're doing these things because you don't know it all. And the economy is a moving target. Today, things are challenging, but one thing we can say is the government stand by the population. Growth in the economy does not translate to jobs directly. Job creation is a manifestation of growth, but some economic growth have lag effects. The introductions and the growth you've registered today will take time to filter down to the man on the street, to the job creation. And when it comes to commodity price, unfortunately, the economy's strength is not determined by commodity prices. Commodity prices are determined by exogenous factors, are determined by global factors. When I mean exogenous, things that are outside our control. And the fact that we import 90% of what we consume means that those prices are determined by the dollar from markets, supply chains. These are outside our control. But the fact that we have subsidized, even in the petroleum sector, in 2022 alone, we subsidized 1.6 billion. And that's what even suppressed the inflation at that time. In 2020, we subsidized about 600 million on the petroleum product. That's why even as we speak in 2024, we are still subsidizing. That's why if you cross the border, a liter of petrol in Gambia is cheaper than Senegal. And we're all taking from refineries outside the countries. So these are some of the, and one thing is the fact that the reforms are ongoing. We are not complacent. We are doing the public financial management reforms. We are working on the state-owned enterprises. We are working on the anti-corruption, fiscal transparency, rule of law, all of this. And the agencies that are cataloging the assessment from NCC scorecard, from CPIA, Transparency International, these are all independent of the country. So if their assessment is coming and pointing to the positive, I think that speaks for itself. Thank you.
Federal Reserve decided to increase interest rates in those countries, the dollars will depreciate. Because of the capital flows into the United States, the dollars is going to depreciate. So that's the reason why we laugh, because most of these developments are what Minister said, beyond our control. So these countries, if they change policies, it affects us. So that's why before you try to do any assessment within your country, you need to see what is happening outside your country, because it has a transmission effect into your own economy. If there is a crisis in Europe and tourists stop coming into this country, the dollar is going to depreciate. And we cannot stop tourists coming into the country where there is crisis in those countries. To the extent possible, we will do what we can, but there are a lot of things that we don't have control over. And the CFA is one of them, because the CFA is tied to the euro, and the European Bank has started. They were tightening, and because of that tightening condition, that is why the euro is appreciating against the dollar, and by extension the CFA.
I think also the growth of exports, the exports, import
balance. And also because of the trade deficit that we have in the country. He has said about 90% of what we consume here is imported. Because of that over dependence on import, it makes us more vulnerable. So whatever happens outside the country affects our exchange rate. So maybe we should be looking more inwards, and that's what we are currently doing in agriculture, trying to promote by the role of private sector intervention in the agricultural sector, because the more food self-sufficient we become, it helps to relieves us from the burden of sourcing effects to import some of those essential commodities.
Thank you. Yes, I think when it comes to reserve management, I wish the governor of the central bank is here. But One thing is you have a minimum. Anything above that is surplus, and the minimum is 3 months average. If you are above 3 months, you are good to go. To have too much reserve is healthy as a buffer, but that's what they call reserves. You use it when needed. And we all know from 2021 to now, there has been acute dollar shortage. There has been depreciation of the local currencies. Importers struggle to source dollars. That's when central bank has deep into the reserves. The graph is translating the actions taken.
Are you telling me that the drop in our reserves is linked to the
intervention?
Shortage of dollar?
Of course, if there is, let me explain.
Here,
yes.
just look at this. This is 3 months of import cover. Anything above this is an excess. You know, if you check in the region, the WAMS region,
yes,
for there to be convergence, macroeconomic convergence, one of the criteria is your months of imports cover. Your months of import cover. You just need 3 months. You know, this is when there is a shock in your economy. You have built up at least 3 months of import reserves. You don't need to go to anybody to help you import your essential commodities because you are able to build a buffer of 3 months. What we are showing here, this is far more than 3 months of import cover. Even if you are close to here, let's say you are going down to 5.6, you are still very good. If you are here, you are very sound. Just at 3 months, you are very sound. So what was happening from 2022 onwards, as Minister has said, this was the time we had the Russia-Ukraine war. And the prices of essential commodities just shoot up. And what will determine how much you need to import is your price and your exchange rate. At that period, exchange rate shoot up. And also, the prices of commodities also went up. So importers find it very difficult to import. They went to the commercial banks. They don't get FX. Now they came back to government and said, you have to help us. That was this time the central bank dipped into their own reserves and decided to support the private sector so that they can import fuel and food items. Yeah, that's why it has.
Yes. It's the intervention.
Yeah.
All right. Thank you. Yes. First element, you can only spend from what you earn. If you want to spend from what you don't earn, it's going to be an obligation. Today, if I write a check as a government and I go to central bank when there's no money for me, it will be like an overdraft. So this was what was the treasury main account balance, which was in negative. And the state at the time continued to borrow. And these were not recorded as a debt stock. So with the coming of the new dispensation, this was recognized. And a 30-year bond was used. In fact, at the time, there was so much government obligation to commercial banks. Were this not coordinated and intervened, the commercial banks would have had serious problems. So that was what was happening. And that alone added, please, Pierre.
Just to understand,
yes.
Most of the debt that we took, we end up taking on board after 2016, emanates from public enterprises. I can give you one example, which is NAWEC. We have the NAWEC bond, for example. Yeah. So government decided to, and these are debt that NAWEC owed in respect to some of the supplies that were provided to NAWEC before 2016. So this was not in the books of NAWEC, government, but it was in the books of NAWEC. So when NAWEC started defaulting on those obligations, government decided to take over that debt, and that raised our problem. It's not only
even Gambi'a
also. I'm just giving you an example.
Yes.
So that because we decided to take over that debt, it raised the public debt of government.
Yes, that's good.
Yes.
Thank you. Thank you.
Yes.
My name is
Gambia. Okay.
So you just mentioned some of the debt that government basically inherits. That was from NAWEC and also from other SOEs. What are some of the strategies that are in place in terms of
to improve the performance level of the state-owned enterprise sector?
I'll leave that. Thank you very much. That's why we promulgated an act called the State-Owned Enterprise Act, and the act is supported by a commission, and the commission has been inaugurated. The commission has already signed performance contract with the SOEs to ensure that they are no longer a burden on the state. The commission, so the performance contract has rewards and punishments or reprimands. So we hope with the coming of the SOE, and once they are fully into action, the state-owned enterprises will be fiscally prudent, because you see, there's a state-owned enterprise investment is about 34 billion total assets, which are all wholly owned by government. There is no state-owned enterprise that I know of that have joint shareholding. All the state-owned enterprises are 100% owned by government. So that means if they underperform or have obligation, they flow back to the state. So like, for example, when Nawek took loan, they cannot service, the state has to pay. Gamtel took loan, they cannot pay, the state have to pay. All of this is adding to our debt stock. So the whole idea of the state-owned enterprise is make this fiscally responsible, to make sure that they operate within budget. And it's not just to operate within budget. If government is investing in this state-owned enterprise, and no investor want to invest without a return. So the least we expect, the state-owned enterprise are supposed to provide two functions: deliver the public service for which they are set up at reasonable cost, and make sure that they are self-sufficient financially and pay dividend to government. You see, you get my point. But now government is an investor here, where we have invested in them. Service delivery may be a question. They are not fiscally responsible. They are not paying you dividend. You even have to pay on their behalf. So that's the work of, that's what. Yes, only these two. And even that one, it was a big instigation from this ministry. Because if you invest, no investor will just put money and sleep. You invest, and this is public money. These state-owned enterprises are owned by Gambians. They are supposed to operate along private sector lines. That's why they are not within the core civil service. Their terms and conditions of work are better than the civil service. So we expect better financial performance. I hope I'm clear. Well, I'm not the judge alone. You are a Gambian. I cannot pass judgment on that. But I thank you all for your time. And this is an exercise we'll endeavor to continue. And press is a very important pillar of the state. We are government. We are not big brother. Let's have conducive interactions. If you have anything you want to report on the ministry, before you make up stories, do your research. If your research are not exhaustive, come and seek clarification. This ministry will be ready to provide the necessary clarification to make sure that the right message goes out. Instead of just, this was what we are trying to address. There should be no vacuum. We are running a public service on behalf of the state, and the citizens need to know what's happening. So before anybody speculate and say things, oh, this is the, write to us. It's only when we refuse to reply, then you can say, oh, as a journalist, I think that's part of your ethos. You say, I write no response. You recommend that. But we see stories about, we're not blaming. We are just encouraging you to come forward. Seek clarification, it will be provided. Thank you.
Fancy di ñàkk rek ñu ngi seetaan ñu bëgg a xam rek naka nga spene sa Eid.
Well li ñoo njëkk a def rek mooy nuyu ñëpp di wax ñëpp Eid Mubarak di baalu aaxa di baalu aaxa ñëpp ñaanal